the CPI report, I'm going to tell you this. I don't know what your first question is going to be, but I certainly breathed a major sigh of relief when I saw the core number, and the market did as well. And I'll bet you that Kevin Warsh did as well. Headline obviously came in hot, but still as expected. But much better core, much better core. So this is not as bad as everyone was fearing.
So talk to us about this core CPI again, year over year, up 2.6%, a little bit higher than last period. But how do you think the Fed's going to view that kind of number?
I think this will be, to use that old phrase, clear as mud for everybody on the Federal Reserve. There's going to be a little bit of something for everybody on that committee. Obviously, the more dovish types will be leading toward, will be focusing on the core, just like, hey, look, core came in half of what the market was expecting. So this is really good news. Of course, the more less dovish or hawkish leaning types will be pointing to not just the headline, but the fact that there's still the war, just the ceasefire war, whatever you want to call it at this point, is still going on. There's no certainty that this is going to last. We'll see what happens with the weekend talks, but we run the risk that oil prices will stay high. And Tom, as you were saying earlier before, we started off the year at around $60, right? And here we are, almost $100 still. So this is still, obviously, we're way off of the peaks, but still very, very high compared to where we were.
Okay, well, let's dovetail with Michael Ball, who was just on. I don't know if you heard Mr. Ball, but the basic idea, Jennifer Lee, is there's demand destruction angst versus those saying the market can carry forward war or no war. Do you observe at BMO Capital Markets demand destruction?
I see destruction is a very strong word, but I do see consumers being very concerned about this. We saw the latest survey from the New York Fed. We had, although income expectations, were actually down quite a bit, especially even for those earning over $100,000 a year. And more, they're expecting income to actually decline or slow in the next 12 months, and inflation expectations were really high. So it's all about expectations. They may be, we still may be seeing steady-ish job growth, a 4.3 jobless rate. But and we're seeing slower job wage and salaries gains, which isn't great, by the way. But it's all about expectations for inflation. And if people think that prices are going to stay high for some time, they're going to hold back. So it is going to cool demand. I don't know about destruction, but I think it will cool demand. And we started to see that already in the January and February personal income and spending data.
Jennifer, have you taken down your GDP forecast, or do you believe your GDP forecasts are at risk here?
So we took it since the war began 6 weeks ago. We knocked it down 0.3.
Okay.
And we might be. I think the discussion right now is possibly trimming it a little bit more, just given what we saw from the consumer side earlier this week or just yesterday. Again, just starting off with slower momentum, still rising, but again slower momentum. So still over 2% growth for the year. Nothing to write home about, but at least it's not a recession.
To the year end, do you suggest, with the securities analysis, Francois Trahan and all, of Bank of Montreal, do you suggest that the earnings exuberance can model and continue based off Jennifer Lee's nominal GDP?
You know what? It's corporations are still dealing with higher prices, and there's still the issue of tariffs, which, by the way, was conveniently sort of forgotten over the last few weeks. But this week came back to roost, and I believe today there's a court ruling about the 10% tariff that the administration has put on. So that is still something that hasn't gone away. I don't think it's going to go away anytime soon, if at all. So even if the ceasefire holds and we see energy prices coming back down, we still have prices under pressure from tariffs, and of course all the other stuff besides tariffs, like Mother Nature is having her fun over the last few years. You're talking about here in Canada, it's still extremely cold here, and it's already like almost mid-April, and it's still very, very cold. So climate change is also going to be having an impact on prices as well.